Hello, I'm Andrew Keane from Edison Group. It's my pleasure today to welcome Nathan Harte, CFO of Avino Silver and Gold, for a discussion today. Avino is a 130 million Canadian dollar silver miner with listings in Toronto and in New York. It's in production. It's producing around 2.5 million silver equivalent ounces a year, and it's got an interesting growth pipeline. Nathan, thanks for joining us today.
Thank you for having me.
Nathan, we recently saw each other in Europe, and I know that you've gone and visited some investors. It's a good time to be a silver miner. How did you find the reception?
Yeah, it was fantastic. We obviously make a point of going to see. We have a lot of investors over in Europe and a lot of especially interest now with that continuing given the movement in metal prices in the last month. The reception was fantastic. We're just really excited to get our growth story out there, and I think it's just going to keep building from there.
You're about 2.4 million silver equivalent ounces in 2023, and I think your guidance is 2.5 to 2.8 equivalent ounces this year. Now that's mostly coming from your existing Avino mine in Mexico. Where do you start to see that pick up? Are there other deposits coming into play?
Yeah, it's a good point. So we're targeting 2.5 to 2.8 million for 2024, which is obviously a small increase since last year. But the growth in the long term is going to come from our adjacent deposit that we picked up in 2022 from Core Mining, and that's called the La Preciosa project. So that is what's going to take us to that next step in growth.
Okay, and La Preciosa, it's reasonably close to Avino as it is now. And you're starting development of that already. Does it go into the same mill?
Yeah, that's correct. So we have a 2,500 ton per day mill at Avino, and La Preciosa is located from Harte to Harte of the mine. It's about 19 kilometers, 20 kilometers. So we've got the infrastructure in place with paved roads, so we can do minimal trucking. It'd be about 25 kilometers on paved roads, door to door, and so that's the plan. So minimal footprint at the La Preciosa site, which will also help on the permitting side.
Okay, so La Preciosa gets you to possibly up to 6 million equivalent ounces. But I know within your project group, you've also got historic heap leach of historic tailings. Are they included in that kind of guidance, or do they come further on into your plans?
So La Preciosa is definitely the focus for the next, call it 3 to 4 years from the production side. Our third asset, which is the Oxide tailings project, which is the historical waste dump from historical 70s, 80s, 90s mining, open pit mining done at Avino. Obviously the mine goes back hundreds of years. That project is something where we put out a pre-feasibility study just actually about a month and a half ago. It's all visible online on our website. Very positive economics, but the focus will be La Preciosa, and that would take us up to that 6 million ounce range by 27, 28. And then with the Oxide tailings, we would make some decisions in the next couple of years, probably a feasibility study, some additional community engagement, permitting, and that's what we're hoping will take us over that edge to the 8 to 10 million range.
And the economics on the oxides, I think from memory, it was something like 50 million in capex and an all-in sustaining cost, something in the region of $10 an ounce, which is roughly half of where your operating costs are at the moment. Is that right? And does that open up sort of lower cost growth?
Yeah, that's correct. So the capex is 49 million on a standalone basis. Obviously, we've got some infrastructure, or well, all the infrastructure, I guess, other than building a new plant. We've got power and water and tailings capacity at Avino. So there will be some synergies there, which is fantastic. But yeah, as you mentioned, that project on a per ounce basis is $10 all in. Our costs for 2023 were just under $22 an ounce. Obviously, we're looking to bring those down, but obviously bringing a project online that's $10 an ounce plus the addition of high-grade La Preciosa, our target is much lower than where we are today.
Okay. And how does your commodity exposure change, as you bring on Preciosa and then potentially a tailings dump? Because I think you're sitting at around 50% silver at the moment, about a third copper. Do they also have copper credits or gold credits, or does it shift?
It definitely shifts. La Preciosa has a small gold credit, but it's a 90% silver mine. Whereas the Oxide tailings is about 50-50 gold and silver, also depending on the year of scheduling. Some years have some much higher silver grades in them, just again, based on the sequencing. So yeah, as you mentioned, right now we're targeting around 45% silver for the year, 35% copper, 20% gold. And long term, we see that shifting between 60 to 70% pure silver.
Okay. And your reserves at the moment, I think you're measured, indicated, and inferred are in the region of about 370 million ounces, and that's 60-40 Avino, La Preciosa. What does that mean for mine lives for those assets?
Yeah, we've got a large endowment of metals. As you mentioned, about 371 million silver equivalent ounces, with over 60% of that being silver. That's split between Avino and La Preciosa. I think for mine life, I mean, it's over 70 million tons, and right now our plant capacity is only about just shy of a million, about 800,000 tons per year. So if you wanted to translate that directly to mine life, I mean, it's close to a century. However, we will look at optimization studies on the whole area once we can get La Preciosa moving forward in the tailings, because there's also a lot of untapped potential below it, you know.
Yep. And Mexican risk, Avino is a very historic mine. You've been operating there for a long time, but Mexican regulatory environment has shifted around over time. Do you have community or licensing issues? Do you get questions on that from investors?
Yeah, I think there's a rhetoric around Mexico right now that it's difficult to get mines permitted or move forward. Luckily for us, that's mostly on the open pit side. At La Preciosa, we are going underground. We're not putting in a new plant. We're not not getting a new tailings permit or anything like that. So the environmental footprint is a little lower, which makes our permitting risk a lot lower compared to some of the other ones in the industry. But having said that, we've been in the area. The company has been mining there, as Avino for 56 years now, since 1968. It's still a lot of the same people approving permits. While there is, a bit of a rhetoric around mining in Mexico right now, we are seeing improvements, which is fantastic. So of course we get a lot of questions on that front, but I think the main question from investors right now is La Preciosa permitting, and once we deliver on that, which we feel we will this year, I think that should answer a lot of the questions that investors are asking us right now.
Okay. What about balance sheet and cash flow and capital allocation? I mean, a strong silver price is a nice problem to have. How does that change your planning, in terms of bringing on La Preciosa, managing capital within the group? But can you accelerate that? Permitting, if permitting is available, or would you look at maybe changing some of your capital allocation and returning funds to shareholders?
Yeah, it's a good question. I think if there's a continued spike, obviously we'd consider all options. When we did our budgeting process, obviously we had silver, gold, copper prices much lower, and consensus, or if not lower than consensus for conservative purposes. But I think from a balance sheet perspective, we've allocated 3 to 4 million to La Preciosa this year, which is enough to get us fully developed down to, or the decline fully developed down to where we start ramping down to the Gloria and Abundancia veins. And then we've got about 4 or 5 odd million allocated for sustaining capital at Avino. We feel that especially at these prices, we can generate that from internal cash flows, assuming they obviously maintain for the rest of the year. That would be fantastic. If there's additional funds available to us, I think what we can accelerate is just additional throughput at La Preciosa and changing the feed mix at the Avino mill. There's some opportunities there, and as well, we'd look at expanding our exploration program at Avino. There's a lot of interesting indications that the mine doesn't stop much below where we've already developed. we've had some pretty successful holes down there, and we want to just fully understand what we're dealing with below Avino, because it's, you know, even after 500 years, no one knows where it ends yet.
It's a nice problem to have. And would you look at expanding that mill, you know, to accommodate that at all?
Yeah, I think that's again bringing it back to the potential optimization study that we would look at. When you have 70+ million tons and the ability only to process 800,000 of that a year, obviously we would revisit and look at all options. We actually have a service shaft at Avino, an existing service shaft that we've considered repurposing for hoisting, which would be able to increase mine throughput, but then obviously we would need the mill throughput to match that. So it's definitely something we'd consider, but we would likely take it to a study and, you know, potentially that feasibility study level, given we're already in production.
So what do investors get wrong about you? You know, do you think your growth is recognized at the moment?
No, definitely not. I think we are, not to say that they get it wrong, but maybe just misunderstood. I think we've got 370 million ounces of silver equivalent. Yes, we're a junior producer, but we have goals to at least get to mid-tier status, and we can do that just through organic growth and without having to spend triple digits of millions of dollars. Even if we build the Oxide tailings, that's 49 million, and La Preciosa is, you know, even for the full development of the mine that we have envisioned, 10-20 million dollars. So it's rare that you can find a company that can go from 2.5 million up to 8-10 million for, say, 60-70 million of investment, and a company that's already in production and can, you know, assuming metal prices continue to hold where they are, can generate some cash flow to assist that. And it's, I mean, management, we're all shareholders. We don't really want to dilute ourselves out of the business. We're fully invested, and I think what some of the questions that investors ask us, the majority one is, how are you going to fund these projects? And we're going to try and fund them as with the lowest cost of capital as possible and the least amount of dilution as possible.
And in terms of valuation, I mean, do you think you're fairly valued within your peer group?
That's a very good question, and that's one that once we tell the story, a lot of investors go look at our valuation and kind of shake their heads. In management's perspective, no, for sure not. We have 371 million ounces of silver equivalent, and our market cap is, you know, just shy of 100 million US. So for every dollar you get over 3.5 ounces of silver equivalent, and even pure silver you get over 2.5 ounces. So not just that, I mean, we're in production. Our risk is much lower than perhaps some of the other juniors, given we already own the assets that we're looking to bring online. And I think we'll see a bit of a change in that and a realization of our valuation once we start to move and deliver on these milestones, for sure. We think permitting will bring our valuation up, just de-risking the assets, our second asset, and then as well as we continue to grow our production. Avino's been kind of in that 2.5 to 3 million ounce production range for quite a while now, and I think being able to show growth will be significant in increasing our valuation for shareholders.
Nathan, thank you for your time today. Really appreciate you sharing the Avino story with us. Thank you for joining us, everybody. For any further information, please reach out and contact us via the Edison website. Thank you.